Mama's all right, daddy's all right. They just seem a little bit weird. Surrender, surrender. Let's not surrender our PepsiCo. Let's not surrender our Pepsi shares up that easy. But as we discussed yesterday, what are we sporting today? Oh, hey, got the do go pack go. Got the Green Bay Packers camouflage hat on today. So yesterday we discussed PepsiCo because they were reporting earnings before market open today, and they had a double beat. They had a double beat their EPS of $2.09 earnings per share. That was a beat by 13 cents. That's pretty good. And then the revenue beat of 22.32 billion, and they beat by $590 million. So because of that, currently we've got PepsiCo up nearly $3 a share, which is 1.63%. So I thought, yeah, before I get into anything else, I got a couple of moves I'd like to make with Pepsi. And if you remember, we also closed our Coca-Cola position just in case Pepsi had a good earnings report, which would then also likely lift up the share price of Coca-Cola, which has happened. I'm looking at Coca-Cola on the Big Mac, and it's currently up 0.6% at $60.20. So if we wanted to sell a call on Coca-Cola, we could do so right now and collect a few dollar bills. We'll probably do that. But in the meantime, what I wanted to do is look at our 185 Pepsi and try to roll that out for a week, because right now those would be called away by the end of trading tomorrow if all things remained the same, meaning the current share price is above my 185 strike price. And of course, when I enter that agreement, when I enter that contract, I am obligated to sell my shares at $185 bills, regardless of what goes on in the market, on or before the expiration date, which in this case is tomorrow. So if we look at roll in this position, it's two contracts, so 200 shares. Roll out the barrel. Let's see if we can't get any action, which would be 8 days out from today, adding 7 days to the current trade, which is no big deal. Oh, and look at that. That's not so bad. So if we stay at the same strike, so we have to cover this $1.60 debit in order to buy to close the two contracts currently on the table. But if we simultaneously then sell to open a week later at the 185, so same strike price, we can collect 158 dollar bills right there for doing so. And I like the looks of that. Let's see how close we can get to that 158. Bum, 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 bum. Let's go with 156, 158. There's our 158. Can we collect that right here and right now to roll this barrel out 1 week? I think maybe we can. Let's see. There it is. $158 bills collected for rolling the Pepsi out another week, taking advantage of the glorious earnings report, because we have no idea what the stock, it may be down or off the current share price tomorrow. But in the meantime, because it's up today, we're able to capture some nice premium for rolling that out and rolling it out in the money because it's at 185, that strike price. But what I also wanted to look at is closing this credit spread that we put on. I think that was sometime, was that this week or last week? Time flies when you're having fun. Let's see here. I've got my face in the way. Can I move this? Yeah. Hey, hi, I just moved a little. So there's Pepsi put credit spread. It was on July 7th that we made that trade and collected $256 for taking the risk of that credit spread. And now, if we wanted to close it, if we went to the 5 cents, we would close it right now. And we've got 4 contracts to close. So it cost us $20, which then would go against our 256 collected, which would end in a net of $236 for us taking the risk in doing so. So I'd like to do that, close that now, because again, we have no idea what will go on between now and when this expires at the end of trading tomorrow. So if we buy that closed for $20, now remember, we are only on collateral of $1,000. So we made $236 net on essentially an investment of $1,000. Now, on paper, of course, that looks super amazing, but it also is the risk, and in the credit spread, the risk is between the two strikes. So in this case, we had 182.50 and 180, right? And we had four, so that's $2.50 spread, and that's 100 shares per contract. Okay, so that'd be $250 per contract, and we had four contracts, that's the $1,000 collateral, which is the max loss in this particular trade. So the most that I would be able to lose if this trade went against me would be $1,000 bills, but I don't like to lose $1,000 bills. I like to collect the difference between the 256 and the 20. So that's $236, which is plenty of money to buy another, beautiful card. In fact, I just got this one in the mail. Was it yesterday? Yesterday or the day before? Let's see. Can we see? Yeah, see. Can't see anything. Hey, that's a little better right there. It's a 1961 Willie Mays, and that is in a PSA 5. So that is a sweet card for me to stare at, which is behind my my MacBook Air right here. And right now, my current rig, as you can see, what I have done here is I have um, blurred out the background because I don't want you to see what's written on my whiteboard back there because you wouldn't understand it. I don't want to have to explain it, but it's how I track different things with regard to real estate, stocks, options, dividends, baseball cards, all of those, all of the above. But what is producing this not great picture is just the built-in camera in the MacBook Air. So at some point I will improve the setup here. We've definitely improved the sound from the beginning when I was just using like my iPhone 2 cord plug-in, the earbuds with the built-in microphone that came with like your iPhone 2. So we have improved the sound since then. And then I've added the old, I don't know why I was willing to put my face on here because I've probably lost subscribers because of it. But eventually, then this picture will be clearer as well. And we'll just keep trying to improve things as we go. But I wanted to do those trades and then also probably look at selling Coke. The Coke and the cola, we have, I think we're down to just 100 shares, right? Yeah, we only have 100 shares. Our cost basis is $59.58. Currently, Coca-Cola trading up at $60.17. What was the high of the day? Let's go to one day. Move yourself back to the corner. Nobody puts baby at the corner. I'll tell you that right now. So let's see. High of the day is around $60.33. It's down just a little bit, but it is green, which would provide for an opportunity to sell a covered call. Let's look a week out and just see what kind of action we can get. Okay, so we're at 60.19. If you looked at the 61, okay, so let's just do math. 16 cents, right? So here's the 16 cents against the 61 strike. So that particular trade, this is how I like to look at it. 16 cents divided by 61, and then it's 8 days out from the trade initiation, which would be 8 days from right now, divided by 8, and then multiplied by annualize of 365 days. It's 11.9. So that's not a great number. So I'm sure the volatility is really low on this. If we look at look at the implied volatility is 12.43%, meaning that the market says Coca-Cola isn't going to be moving much between now and next Friday. So what we'll probably do is sit on that. We'll watch the share price of Coca-Cola. And then if we look at Coke, I believe it's not next week, but the week after, they will then report their earnings, right? They will report their earnings, which anywhere around that time is going to be higher volatility, which means, yep, higher premium. So if we look at the earnings, their upcoming earnings is July 24th. So let's see. Next Friday is the 21st. So that'd be Monday. Monday. And then based on what Pepsi did, we would imagine, okay, we would imagine that Coca-Cola will do well also. But again, this share price can drift with the market, right? So we'll be keeping an eye on that and then keeping an eye on volatility plus premium on the action for the Coca-Cola. So at this moment, we're not going to do anything with Coke, but we'll keep an eye on it because if it keeps going up today or even tomorrow, then it could provide an opportunity for us to trade it and get a decent amount of premium for doing so. So as of this moment, thanks for tuning in. I appreciate that very much. Subscribe, like, comment, share, all of the above. And guess what we'll do? We'll see you in the next video.